Welcome, everyone. I'm your host, Henri Arslanian, and welcome to this other episode of the Future of Money podcast, where really we go discuss with some of the thought leaders in the space and really try to actually bring you some actual color on what's happening on a practical perspective, not only in the crypto markets, but also the crypto industry more generally. And today we're joined by Nick Philpott. Nick, who's the co-founder of Zodia Markets. Nick, great to have you on the show today.
Thanks for having me, Henry.
Fun fact, guys, for everybody listening, Nick started his career, actually, obviously he's the co-founder of Zodia Markets, and we'll talk all about that in a second. But he started his career in finance in Nigeria, which I find is very interesting. And we'll talk about emerging markets, including Africa and Nigeria in a second. But the part that I love the most is that he studied at St. Andrews University, and he worked as a bartender in St. Andrews, where apparently used to serve even Prince William back in the day. So is that true, Nick?
That's true. That's true. And Kate Middleton, or the Princess of Wales, as we should call her now. Gin and tonics, Bombay Sapphire and tonic, if I remember correctly.
My God, here we go. You have the insights on their favorite drinks. You can't go wrong with that. Well, Nick, great to have you on the show. I have to say, I've had people, I always like to ask a fun fact about people when they come on the show, because I think it creates this human bond with us. It's the first time I hear a story as wild as what you just mentioned as a bartender for the royal family. But here we go. That's what makes also crypto so interesting as well. Well, Nick, before we jump right in, there's a couple of topics I want to discuss today. But can you give to our audience a bit of background on yourself, but also on what is Zodia Markets and what do you guys do? And also, particular question, how is it different from Zodia Custody?
Yeah, makes sense. So, Nick Philpott, when I started in finance after leaving the British Army, I worked for a bank called Standard Chartered Bank. Many people will be familiar with them because they sponsor Liverpool Football Club. So that's where everyone will think, I remember that name, but not from where. So I worked for them for 16 years. As you say, started in Standard Chartered Bank, Nigeria, covering local financial institutions, so banks and embassies and charities, that sort of thing. Moved back to London and then just had a career across financial markets. So that's sort of the trading part of the business, the trading floor. And that culminated with me working in the electronic trading division. I was the head of market structure. And actually, another fun fact, amongst other things, we worked with Libra, or DM, for 2 years, so the Facebook stablecoin.
I want to talk about that for sure.
Yeah, no problem. And then in terms of Zodia Markets, so we started working on it about 2020. We followed on from another company that you mentioned, Zodia Custody, our sister company. And really, what they do, so Zodia Custody, as the name implies, provides safekeeping of digital assets. Zodia Markets helps you execute those digital assets into other things or other digital assets once you bought them. We work with other custodians. They work with other brokerages and exchanges, because really it should be all about giving clients the choice that they want. The last thing I'll just add on that, what we wanted to do as a bank was to emphasize the segregation of the activities of custody and execution. We think it's much better having that separate.
But isn't it ironic, Nick, and I want to talk more about what you guys do in a second, but when you look at traditional finance, a lot of the banks, let's look at the prime brokerage, for example, they have execution and custody together. Actually, they're able to offer portfolio margining, and optimization, if you want, from that perspective. Whereas in crypto, it's actually the exact opposite approach you guys have taken. We're separating markets and custody. Why is that? And do you think this will change over the coming years?
Well, I mean, if you go into a big bank, then actually those activities are segregated, but they're in the same legal entity. They tend to be in the same building, but you have information walls and all those sorts of things. As you rightly implied, the really dangerous things to combine are market making and the activity of custody, because then the phrase that people use is the temptation is to put your hands in the client's cookie jar, so to speak. The best example was FTX, and it's great to see that that's ended so well, potentially, knock on wood, for a lot of the asset holders finishing up in the money, as it were. But we felt that having seen the way that a lot of crypto asset firms were doing it, we really needed to really emphasize that segregation, that your assets are off balance sheet, both from your custodian and from the entity that you're choosing to execute with, and they are safe. The nice thing with crypto assets is we start to use not only digital asset technology, but things like APIs and so on and so forth. So, for example, we could have a look through to clients' assets in that custodian. A lot of people in the industry are now calling that off-exchange settlement. We can lock those assets and then mirror them back onto our platform. So that way, if we were to go under, heaven forbid, then assets are exactly where they started and are there to be handled by back to the client.
How do you guys compete? So, for example, there's numerous execution desks in crypto. I mean, forget even TradFi, but on crypto alone,
Yeah.
you have numerous OTC desks, execution desks. I mean, there's the market is quite competitive right now. How do you guys, when you guys pitch, how do you guys are different? Of course, there's a standard charter link, but
Yeah.
how do you guys pitch yourself as having a differentiator compared to all the other desks in the market?
Yeah, so in setting the sort of the parentage and the counterparty risk and the good structuring and all those sorts of things aside, the biggest USP is that access to banking. It's certainly still not right that a lot of digital asset firms struggle to access banking, and even customers who want to start using digital assets are worried about being debanked by their existing providers because they're engaging in crypto asset activities and so on and so forth. Because we're owned by majority owned by Standard Chartered Bank, that gives us the privilege of being able to open bank accounts not only in dollars, but also in a whole range of other currencies, and in particular those currencies of those countries where crypto is actually as active, if not more active, than say the United States or Canada or the United Kingdom or the European Union and so forth. So examples would be places like Kenya, the United Arab Emirates, Singapore, the Philippines, and so on and so forth. What we can then do is we can then combine that with the foreign exchange capabilities of the bank. So a lot of those crypto asset natives, as I was mentioning, if they're struggling to get access to banking, imagine what the quality of the foreign exchange is that they're getting access to. And we've come across, some pretty startling situations. I mean, one of our most valued clients now, they were paying 400 basis points of 4% for dollar dirhams to their previous bank provider, and those are the kind of rates you expect to see in a regional airport. I mean, really, really, really egregious. So we're able to come in and basically take foreign exchange liquidity and combine that with stablecoin liquidity in particular to provide our clients with faster and cheaper execution. I suppose the last point I'll just add is that because we can then integrate very deeply into the bank's ecosystem, that allows us to move the fiat even more quickly. As anyone who's running a digital asset execution business will tell you, fiat is always the problem. It's too slow, it's too unpredictable, it's too expensive. Working with our parent and getting that to speed up, we're able in many cases to get the fiat to land T0, in some cases in minutes. So, for example, we're very lucky, and this is public knowledge, that Standard Chartered Bank's Circle, the issuer of USDC and Eurocoin, that gives us almost the unique capability to mint and burn USDC in under 5 minutes, 24/7. And the first time we ever did the test of that was on a Saturday morning, and my word, it was satisfying to see it land 4 minutes, 52 seconds after settlement.
Interesting, but I mean, I see your point where the fiat, the on ramp and off ramp that you have actually as an entity, Zodia Markets has obviously is a differentiator because other OTC desks they have to go and try to get these different banking rails, which obviously is a competitive advantage you have. But I would argue that
Correct.
there's still the problem because let's say you're moving to crypto to fiat, when you're
Yeah,
wiring this to somebody else's a client's bank
yeah,
account, it's still going to be stuck in the system, right? And I guess the alternative here, what would be optimal, is that Standard Charter starts opening up accounts for crypto clients, because then somebody could be your client and then can literally on a T0 basis even literally move the assets to their client's bank account. But to
correct.
the best of my knowledge, Standard Charter is not opening accounts for crypto companies, at least at scale or
Not
at
at
large
scale,
level.
no. It has to tread a very fine line between the regulatory pressures that it finds itself under and the scrutiny, and rightly so. And it obviously has commercial obligations as well to its shareholders, and it's got to make sure that it's opening accounts in its own interest. It's got to make sure that it generates the right return on its
Yeah.
time and resources invested. So it is public knowledge that it does already bank some counterparties, Coinbase, for example. So there's articles on that. So that does help us. But critically also, what helps us is when we're speaking to corporates, so large multinationals, and they are either mass consumer goods companies or brand companies who are starting to use NFTs,
Yeah.
or oil and gas companies who are starting to buy stablecoins from us in order to transact in oil cargoes cross-border. That's the beauty. We're able to book transfer the fiat currencies from our bank account to their bank account or vice versa. I mean, and those settlements, 3 to 5 minutes. Again, it's very, very quick.
As long
But
as I
it
guess
not
they're a client of the bank in their normal operations. Yeah.
That's correct. That's correct. But even after that, there are other ways that you can try to speed up fiat. So, for example, you can make sure you're integrated with SEPA rails in Euro. You can make sure that you have onshore banking. So, at the moment, a lot of our banking is offshore out of the UK and Singapore. So, the next stages for us are to deepen our integration with those payment systems. So, in the UAE and Turkey, we're working with partners of Standard Chartered to get banked by them, so that we can deliver fiat much more quickly.
And I think you're right because I think this could be a competitive advantage because, especially the use of stablecoins in emerging markets. And I want to talk about this in a second, especially your experience with Libra. But I think the market, the mass market, including media and everybody, underestimates how much stablecoins are being used in emerging markets and in
Correct.
cross-border payments. I wish there was some more accurate data between what's
Mm.
happening between LATAM and Africa or Africa and
Yeah.
Asia using Tether or USDC and other stablecoin, FDUSD and others. I mean, I find it very, very interesting that that's one fact that is not provided. I think I can see now for you guys
Mm.
when at the Zodia Markets, if a client, I'm a like I said, oil trading firm,
Yep.
and I have an
Yep.
account with Standard Charter, and my clients actually often I think many of them don't want to admit it publicly, but they prefer using stable coins for their settlements. In many cases, it's so difficult to get a bank account. This
Exactly.
can give you a really, really good comparative advantage on that perspective, including the FX side as well.
No, absolutely. And it's just about knocking down those counter arguments that a lot of people present, when you're trying to pitch using digital assets to them. And then just to answer sort of the unasked question, what's Standard Chartered's kind of perception on this? I mean, Standard Chartered recognizes this is going to cannibalize some existing businesses, but that's kind of a natural evolution. But it's the bank recognizing that it's already on the menu, and along with many other banks, but it has the choice, along with many other banks, but they're not making that choice, to be on the seating plan as well. So by running companies like us, by running companies like Zodia Custody, and indeed it's planning to offer its own custody solution, powered by Zodia Custody, out of DIFC, then again it can give that reassurance to counterparties who are thinking there's a lot of career risk in making this first step, but actually it looks a lot better if I'm using something that's backed by a large multinational bank that either we bank with or we certainly know from its 170-year history.
Yeah, absolutely. If I was running sales at Zodia, that's exactly, it's the people that you're pitching to. They don't want to get fired. They tend to be quite conservative. It's somebody in treasury. And there's a lot of these organizations, they've been there for 10, 15 years. They honestly, they're put there often their own careers before that of the company. And in this case, you guys are a good bet of a safe pair of hands that there's somebody to blame, which is good on that side. I would even argue, ironically, there's a big advantage here where for even Standard Chartered not to get new crypto clients, but actually go to its existing clients and say, hey, we have Zodia Markets, we have Zodia Custody, we have this competitive advantage, and let's try to take advantage of that. And what's your goal on the emerging market side? I mean, we mentioned at the introduction, Nick, how you started working in Nigeria. What is the, let's say, from the client base you guys are seeing, and when you mentioned your differentiator could be this emerging markets element, what kind of activity are you seeing where people are using on-off ramps or stable coins in the broader emerging markets? And how do you see this? How do you think this is going to evolve over the coming years?
Yeah, I mean, I could probably drop most of our clients into three categories at the moment. So the first are the crypto natives who, as I said, they're just struggling to get access to decent foreign exchange. So they're using that just in their normal course of business. So large flows, we have, Turkish liras, Emirati dirhams, Bahraini dinars, Singapore dollars, things like that. So that's just sort of a day-to-day business. The second, well, and also, actually, I should just layer on there, they also value the reliability in having a counterparty that has reliable banking. I think after, certainly March 2023, a lot of people, including us, have seen some of their counterparties suddenly turn around and go, got a problem, I can't settle dollars anymore, or insert currency here. And we're still seeing some clients getting debanked. So second group, though, to move on, is our payments companies. So doing cross-border payments. So that could be either retail cross-border payments or wholesale cross-border payments, or indeed remittances. So people, say, moving money from the United States to Mexico or from the UK to the Philippines, and so on and so forth. And there it's a real emphasis on speed and cost. And it's not necessarily having to beat the cost, but just be the same as the existing providers, because it's the implicit costs that we can really target. A remittance company, for example, in order to give the illusion of an instant payout, is just having to run very large balances in local currencies in the destination countries. And that's obviously bleeding FX volatility, inflation, and so on and so forth. The third group, as I touched upon, sort of primary commodities. I mean, it started with oil and gas, and that's really a reflection of the fact that stablecoins, I don't think, are going to disrupt the major payment channels, New York to London, Singapore to Hong Kong. It is going to disrupt channels, like LATAM to Africa, Southeast Asia to the Middle East, and so on and so forth. Places where getting, for example, dollar banking is a real challenge. And if you do manage to get dollar banking, then the quality of that dollar banking is either very, very unreliable because that local bank has to go through so many correspondence that it's taking, I mean, let alone 2 days, it's taking 5 days. And again, in a high interest rate environment, you've got capital that's just tied up, you're not getting interest. So even though the stable coins don't pay yield, no one really cares. To borrow the old moniker, you don't have to outrun the bear, you just have to outrun the other guy. And the other guy is correspondent banking.
Yeah, which is, I mean, it's a no-brainer on that front. I agree with you. I think the big corridors will not be disrupted, but the smaller ones, and there's a lot of those smaller corridors, right? There's a big opportunity. Let's talk about stablecoins. When I was hearing you speak right now, Nick, I was thinking, okay, if you go to your, 1,000 biggest clients of the bank, right? I would go to them and say, guys, you have an account with Standard Charter. Why don't you open an account with Zodia Markets or Zodia Custody? And we're able to actually give you some benefit. You have a competitive advantage over the rest of it. You save all these correspondent banking fees and so on and so forth. And obviously, because you're using stable coins behind the scenes, USDC Tether, I'm wondering, when I was listening to you, why don't you guys launch your own stable coin? Because then you really control every vertical of the value chain, and you get to keep the interest rate as well, instead of paying it off to Circle or to Tether.
It's a very good question, and it's one I've been asked multiple times. I mean, from our perspective, we've got a lot on our plates just with the business model that we've got, and as you can imagine, it's not a battle, but it's a lot of work to get a company like Zodia Markets or Zodia Custody through a large bank, through their regulators, in a satisfactory way, and rightly so. It's a lot of due diligence, a lot of risk management, doing things the right way. That takes time. I reflect that now that there are already 25 currencies that we're aware of that have stable coins linked to them. So I actually think that the easier opportunity is where many of those issuers have already done kind of that first, learning process with the regulators, or they have links with their local regulators. So they've kind of got that local comfort. They've managed to sort of get the first steps, build the tech so you can do the minting and burning. I think the bank's real opportunity is to come in and start banking the stablecoin issuers, because then we can repeat the trick, figuratively speaking, that we have with USDC, and we're looking to repeat with a few others where we can do that minting and burning 24/7. And there are still opportunities for the bank. It can be a deposit provider to the reserve. It could be a broker for treasuries or for the repo, again for the reserve. It gets payments for the issuance and the redemption. Then we're doing the sort of the distribution, if you like. And then if there's FX hedging, so if someone's buying USDC but they're buying it with Turkish lira, we're doing a dollar Turkish hedge with the bank. And then once you've got your stable coins, Zodia Custody can custody them. So I think I've counted off 7. There's a slide somewhere where I've written for the banks to what I call the 7 revenues of stables. And I think it's a great opportunity.
100%. I agree with you. I think for a lot of these big organizations like Standard Chartered that have a presence in many parts of the world that are involved in corporate banking, often in crypto, in the early days, and I was partly responsible for that, I would say, like we used to often think, I used to even think myself that the big opportunity was in wealth management, where you can go offer these crypto products. Maybe the opportunity was in retail banking, offered your retail customer access to Bitcoin or other products. But the more I think about it, especially in the current environment where we're seeing with the problems, forget even bank account opening with U.S. correspondent banking, I would even argue that the whole de-dollarization that is going on, or the conversations around the de-dollarization around the world, I'm actually surprised some of the competitors to Standard Chartered, namely HSBC. As somebody who spent 15 years of my life in Hong Kong, we always like to bitch against HSBC, but I find it very interesting that the bank has not been involved in this, for example, more actively, exactly replicating what you guys have done, for example. And to a certain extent, I would argue the big American counterparts as well, Citi or JPM, you can argue they've done some initiatives, especially on the JPM side. But I think it's a very interesting opportunity you bring forward, Nick. I can see how you guys have a USP on that side.
Yeah, I think so. It's puzzled me slightly with the other banks. Yeah, the same as you. A lot of the banks, when they're looking at digital assets, they're looking at tokenizing securities or tokenizing carbon credits or some other kind of financial instrument. So there's regulatory overhead. There's then an open sort of door to create the excuse of we need to wait for regulatory clarity. So that's going to take multiple years, and so on and so forth. The problem you have, from my opinion, is the elephant in the room is cash. So once you actually start running a digital asset business, you realize that fiat is always the problem in your operational settlements. It's too slow, too unpredictable, and too expensive. So, for example, if you tokenize a carbon credit, then fantastic. We could do a trade today. We could move the carbon credit from me to you, but the money that you pay me is not going to arrive until Monday. So fundamentally, you're back where you started. So focus on cash. And yes, people could go, well, central bank digital currencies are coming along, da 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 da. Yes, I think they've got a place potentially, but they're going to be definitionally national. I don't see them being as suitable for cross-border payments. Yeah, yes, for example, I could use the e-yuan here in the UK, but in Bicester Village and Harrods, that's not really sort of universal acceptance or adoption. Whereas stablecoins, I think, because they're sitting on internet rails, have the ability to move across. The last bit I'll layer on is I feel like we're just getting started, particularly on the cross-border trade side. So to illustrate, if you're buying an oil cargo with stablecoins, the next logical thing is to tokenize the bill of lading that represents the cargo on the ship. A law was written last September to allow that under English law, the Electronic Trade Documents Act. As far as I can tell, I'm no trade expert, but it's an unregulated instrument, so very straightforward. Now it's on the same chain as your means of payment, and you can move them synchronously, or you can put them both into escrow. And I think it's just starting with those basics, rather than, for example, targeting financing. Just focus on the assets that are moving around, then work out how to do the money.
I mean, there's a whole layer of smart contracts you can put in there. There's a lot of stuff that can come in and make a big difference. It's funny you mentioned bill of lading. When I was a young law student and one of my master's degrees, my thesis was about letter credits and bill of ladings in international trade. And at the time, this is like almost 20 years ago, I was shocked how the industry had not evolved in 100 years. And now 20 years later, I'm even more shocked how it's not changed at all. That's one industry still using faxes, and it's completely inefficiently. And many people have tried, but I think what you're mentioning is very interesting. I want to touch upon stable coins more particular. I mean, and CBDCs. I mean, let me start with CBDCs because you just mentioned you do not believe CBDCs will be used on a cross-border basis. And I appreciate your example with the ECNY. But what do you think? Do you really think the market will prefer a US dollar stablecoin issued by a private company versus a potential CBDC issued by a country or central bank that could not be the US, but potentially something else over that?
I think unless that central bank has the courage to place that stablecoin or that CBDC, whatever you want to call it, on a permissionless ledger on the open internet, it's not going to get the same benefits or provide the same benefits of the open internet, either to it or to the potential users. And I just don't see any central banks really having the courage to take that step. It's a shame. In terms of the sort of the private sector side of things, I think what we'll see is different design approaches. And certainly, for example, we see USDC. That's already got a huge amount of adoption. People like it because it's already got a degree of recognition. But then you have PayPal coming along, so that's huge brand recognition. Right. Then you've got Paxos, still US regulated. They've just released a yield token, so that's another slight sort of variation on the theme. And then you've got Tether, which many people look upon as a euro dollar because it's not issued by a US entity. Right. So I think having that sort of let a thousand flowers bloom, so to speak, I think would be very, very interesting.
Yeah, absolutely. I totally agree with you. I think the stablecoin ecosystem is not very sexy. People don't look at it, but it's extremely profitable and it plays such an outsized role. And what I find interesting as well, Nick, when I meet people in emerging markets, often their first interaction with crypto is via stablecoins. They mentioned Turkey, Nigeria, pretty much all Africa, Latin America. I've done myself so many transactions with people around the world on stablecoins, from South Africa to even America, just because it's so much more convenient. One thing I want to ask you is, I've done in my last book, the book of crypto, I have I think 20 pages on Libra and its whole from Libra 1.0, 2.0, and 3.0, and then the collapse, if you want, or collapse, or let's say the cancellation of it. You guys were involved in that Libra adventure.
We were.
What would you share with our audience on the Libra expansion? And most particularly, why do you think it did not work as well, now that we're a couple of years behind?
Yeah, okay. So almost beyond the statute of limitations or something like that. Although I'll keep the NDAs, I'm sure, still apply in some way. So I'll be careful. But joking aside, so funnily enough, it's how I met Max, who co-founded Zodia Custody, our sister company. So he and I literally met in front of Facebook in 2019, back the February. So that was before the white paper. I think they would have done it if they started with the team that they finished with. I think they sort of went around, perhaps had the wrong attitude, unknowingly or unwittingly. with some of the regulators that they met, and just the wrong messages went out. I think the evolution from the original multi-currency single coin to multiple single currency coins was very positive. That was where we really started paying attention, because then if you've got, I think there's 5 different currencies on the same chain, then the opportunity to do payment versus payment settlement, so that's where one leg moves at the same time as the other leg and contingently on the other leg, that removes counterparty settlement risk. At the moment, the way that financial markets manage that risk is using CLS. Very, very expensive, only works T+1 or T+2. And for pairs like dollar versus Singapore dollars, it only works 4 hours a day, Monday to Friday, give or take, which is, it's just not good enough operating hours for global financial infrastructure.
Yeah, but do you think it was? So I think it's interesting. You mentioned a bit of the cowboy-esque attitude at the start. It's like move fast, break things. Works in tech. It doesn't work easily in banking as well. But do you think there was an element also of geopolitics in the sense that, I mean, if you and I launch tomorrow stablecoins, it's not going to really threaten the US dollar as a reserve currency. But if a company with over 2 billion monthly active users launches a currency in a way. Don't you think that this was actually kind of there was a real threat to the status quo of the system?
I think there probably was. Whether that was understood or not is another matter. I think just people felt instinctively uneasy. And don't get me wrong, Facebook has had its issues with data privacy and Cambridge Analytica and things like that. But the way that I saw it was that this was potentially the first major opportunity to undo the cause of the root cause of those sort of privacy issues, which was the original sin of the internet, as Mark Andreessen calls it. So back in 1994, when the internet was really starting to get going, Netscape and Mark Andreessen and Microsoft were working with some of the big payments companies, and they'd realized there was just going to be no way they could get payments into the browser. So as a result, the sort of economic model of the internet became based on advertising. And if you're advertising, you need to know, are you male, are you female, are you fat, are you thin, so on and so forth. You need all of that personal information. Instead, if you can get to a point where you're monitoring the wallet and you're looking at what that wallet is using, what that wallet is spending on, then you can advertise to the wallet rather than the individual. So the need to capture all of that personal data actually starts to go away, and you can unwind that original sin. Ironically, I was at an event earlier this week, and I saw a remittance company who've integrated with WhatsApp, and I'm sitting there thinking, it's funny, I remember seeing the exact same thing in 2020, and that's really what where we should get to. Being able to send money like a text message, like an email, I think is going to do more for global poverty than many things that many people have done in the recent past.
Absolutely. And I think I would argue that, I mean, I talk about this in my book, but I think the motto that Libra did at the early days was that in a world that you can send an email for free, a WhatsApp message, a SMS, pretty much for free, instantaneously anywhere in the world, why sending money is so complicated? It's actually unacceptable, frankly. It's a great story. One day, I think you'll tell your kids, your grandchildren about all the little stories behind Libra that took place,
Oh, completely. Well, one thing I would add is it also helped us just as a bank. Because if you're going to internal compliance teams or risk teams or people who just know nothing about crypto and you're trying to explain it, you're going, right, Bitcoin consumes lots of electricity. There's this guy that no one knows who it is, Satoshi Nakamoto. There's lots of volatility. People just go, no, not interested. Forget it. Whereas if you start with the conversation, you go, it's pegged to the dollar. The reserves are in Boney Melon and Facebook's doing the tech. Everyone goes, okay, all right, we'll give you a hearing and let's find out what this is all about. So it was a good way for us as an organization to learn.
Absolutely. I think it takes out the career risk as well from that perspective in regards, right? Well, Nick, we're going to go through quickly in a minute left. We're going to go through a fire round of questions. So I'm going to ask you quick questions. I need 1 or 2 word answers. Okay. And I hope you're ready.
Hit me.
Perfect. So Nick, what do you do when you're not working? What's your favorite thing to do when you're not off work?
Cycling.
Oh, interesting. Where do you cycle in the UAE?
Al Wathba, so big 30-kilometer track in the middle of the desert with street lighting. It's amazing.
Beautiful thing. I was going to ask you my next question. What's your favorite thing to do in the UAE? You live in Abu Dhabi now.
So if not Wathba, then just swimming. Beautiful seas, beautiful beaches, great way to relax.
In what industry would you be if you're not in crypto?
The army.
The army.
Military. Yeah.
My next question, actually, if you could join any military unit, Army, Air Force, Navy of any country, which one would you want to join?
The Royal Gurkha Rifles, which was the regiment I was due to join. I got medically discharged from Sandhurst. That was career plan A. Never mind. I'm very lucky, even in spite of that.
You joined the battle of the crypto industry. Another one.
Yes, exactly.
You studied history in university at St. Andrews. What part of history do you find the most interesting?
Business history. So it's not well studied, not well understood, and it's what makes the world go round.
Absolutely. The history of money, I think it's one of the most interesting topics ever. If you could go back to university today, you studied history, what topic would you study knowing what you know now?
I would study Samson Gideon, who was the Rothschilds of the 18th century. He financed the 7 Years' War. One day, I would love to do a PhD on that.
Amazing. If tomorrow you're the CEO of a big commercial bank, what's the one thing you would do regarding crypto that you wish a lot of CEOs would be doing right now?
Change the risk appetite so that you are happy to provide basic banking services.
Yeah, exactly. Very, very interesting. What surprises you the most about the crypto industry?
The collaborative nature of it. It doesn't feel adversarial.
Yeah, it's absolutely correct. It's one of the few industries, especially in the last year. And so if people are in it, they're going to be in it for a long, long time.
Yeah.
And again, to wrap it up, again, Nick Philpott, co-founder of Zodia Markets. This is Nick, the traditional question. Anybody comes on my show. Nick, if you could have lunch or dinner with one person dead or alive, lunch or dinner with one person dead or alive, who would you have lunch with?
Robin Williams. Easy.
Wow, Robin, why is that? Interesting.
I don't think I'd eat anything. I'd spend the entire time laughing.
Yeah. Miss Doubtfire must be one of the best movies ever. I haven't had this answer. I've asked this question for many years all the time. I love it. Nick, Absolutely. Where can people learn more about you or more about Zodia Markets?
LinkedIn. So www.zodiamarkets.com. We've got lots of sort of financial history stuff there on the website if you fancy looking at that. Otherwise, hopefully more with this podcast and more to come.
Awesome. Well, guys, thank you very much. Hope this was a useful episode, guys. Make sure to also check out my YouTube page. We have a lot of content there as well. And also big thank you for all the support for the podcast. This podcast now is in the top 5% of all podcasts globally on Spotify. So, guys, really big thank you from the bottom of my heart. I really, really appreciate the support of each one of you. Thank you very much, guys, and see you all soon for another episode of your Future Money Podcast.